Let's start with the Indian rupee first, and it has snapped a 5-day of gains today, coming off the 4-month highs hit in the previous couple of sessions. The currency hit an intraday low at 61.41 versus the dollar on back of sluggish equities and dollar demand by oil importers. The rupee ended the day on your screens at 61.25, more than 0.25% of a decline coming in.
We have traded below 61 on the USD INR, but what we are seeing there is a reasonable amount of demand coming there from the nationalized banks. It's probably primarily on account of covering oil demand both for spot and for the forwards also. So I think levels below 61 will continue to see fair amount of demand from the flows. We could basically go back towards 62. I think we probably be in a range of 60.5 to 62 in the short term. And this probably could break on the higher side if Fed taper gets announced sooner than expected.
Okay, that's a view coming in from Standard Chartered Bank then, 60.5 to 62 of a range in the rupee for the near term. Let's also take in then Jayesh Mehta, who's country treasurer, Bank BOA, Merrill Lynch, and Vijay Bhamwani is author and CEO at BSPL India. Thank you so much, gentlemen, for joining us. Starting with you, first of all, Jayesh, what's your sense on the currency now? Because while on the other side, we have seen the rupee reacting to a whole of thing in the previous few days, the trade data to start with today wasn't much of an encouragement. And of course, the markets as of now are awaiting the IIP and the inflation numbers coming in tomorrow.
Yeah, I think on the currency side, I would completely agree. It would what we see is 60.5, 62 is the range. Mainly, again, if you really look at the traditional demand, which kind of little bit brains off for the last quarter. And at least for the next couple of months, we see the demand being less. It has potential of going below 60.5 or so, but then you have oil companies, and also we would expect RBI to also intervene and shore up whatever they have sold till now at 60.5 levels. So that's where we would keep.
Vijay, getting you in the conversation as well. What's your sense now coming in for the currency on the charts after 5 days of gains? Is today's move expected?
Manisha, I've been talking about the potential for appreciation in the rupee being fairly curtailed. And that's exactly what you're seeing. With a little bit of a nudge by buyers on the dollar side, you are seeing the rupee go through the floor. And I would still maintain that 60.5 on the cash spot dollar would be a level to watch out for. It's a very stiff resistance for the rupee to appreciate past. And the potential for the appreciation in the dollar, on the other hand, is wide open till 63.25. So my guess is the range is between 60.5 to 63.25. And should there be any kind of adverse data points emanating either from the IIP, the inflation, or any positives for the US dollar emanating from the US economy, my guess is the rupee can surrender quite a lot of its initiative that it's gained in a very short period of time. So one needs to avoid the temptation of shorting the dollar below the 61 mark.
But how about the dollar index itself, Vijay? Because this is one area that has seen a breach of 80 yesterday and hasn't done much in the day today.
Manisha, what I talked about earlier was the USD INR. Now, within the currency basket, I think what is clearly emerging is that the European currency, the euro, and a whole lot of individual currencies are now showing relative strength vis-a-vis the USD. So my guess is amongst the 4 currency traded pairs here in India, I think a euro is the dark horse that one needs to watch out for, especially if the euro goes past the 85.5 in cash, which would translate to approximately 86 in the prompt month future series. I think the bulls are likely to basically go on the aggressive, go on the offensive, and take prices significantly higher. The action is clearly shifting. The percentage hike in volumes, the rise in open interest in the euro, and to a very small extent even the British pound sterling, that indicates that traders are now slowly but surely shifting their preference to the euro INR.
Jayesh, coming back to you, how would you look at the various data that is due to release tomorrow in India? And of course, 17th, 18th are the next dates when you would have the FOMC and the RB policy review also coming in. How would you want to look at the rupee, and what's your sense on what's coming out from these announcements?
No, as I said, I think a lot of stuff has been priced in. In fact, even on the inflation side, the inflation has been priced in. Nobody has priced in inflation coming down with the food prices coming off a little bit. But I think currently the market has presumed there will be a 25 basis point rate hike happening in 18th of December. As far as the U.S. is concerned.
All right, absolutely. The U.S., of course, would be an important data to watch out for there. The markets, of course, would be awaiting for any tapering news that could be coming in from the U.S. markets there. The first quarter of 2014 is what they are. Most of the markets or the markets participants really are putting that too. Vijay, how would you look at these data really? And ahead of that, do you see choppiness continuing for the currency? And now with just about 15 days left before we end 2014, what is your broader range coming in for the Indian currency?
Manisha, if there is tapering, the markets may have kind of factored in some of that probability, but to a trader, to a broader market, when the actual event really unravels, there is always a minor ripple effect in the market. So it would be very brave to suggest that the markets have completely discounted the possibility of a U.S. tapering of the quantitative easing program. I think as and when it does occur, there will be some mild or maybe medium level shocks in the currency markets. I think it will be detrimental for the emerging market currencies. They will surrender some ground vis-a-vis the US dollar and probably a host of other currencies also. And looking at the range as you talked about, I would still stick my neck out and say that 60.5 is a level that the rupee will find very difficult to appreciate past. As far as the depreciation is concerned, the remaining fortnight or so of the year that you are likely to see trading remain open for the remainder of the calendar year, I think 63.5 is a level which would be a wild card. Failing which 62.5 is fairly achievable. So I'm betting a tight range of 60.5 on one side and 62.5 on the other.